There isn't any particular trigger that has caused the latest sell-off, but a soft PMI reading at the end of last week has reminded people that growth is still quite weak. It's one of the first readings that we had for third quarter GDP, so it's showing that maybe the quarter ahead is going to be soft because the second quarter was already inflated by a stock market bubble, and that support won't be there in the months ahead. So I think what we're seeing in the stock market is a reflection of wider fragile sentiment towards China right now.
In the government's attempts to try and stabilise the stock market, it asks questions about its ability to stabilise its own economy. At the end of the day, if a government looks to control something as fundamental and market-driven as a stock market, it's also tried to do the same to its own economy over recent years. Can it continue to do that? And if it fails to stabilise its own stock market, I think investors will only have more and greater concerns about its ability to manage its own economy.
This is an administration that wants to be in control. I think that much is clear. I mean, just generally wants to be in control, and so they probably will get control of this. I'm not, I'm not sure I'd take them on, but they are running in the face of significant kind of margin pressure and forced selling, so that it's quite hard to control it.
Largely they've been heading for the door. I mean, there was some more buying, there was a bit of buying of Shanghai stocks today from Hong Kong, but in general they've been sellers for 13 of the previous 16 days. They've sold some, $7.5 billion worth of stocks. Again, there was a slight recovery in Hong Kong, but you look at mainland shares trade in Hong Kong, they're the worst performers over the past month out of the world, down some sort of 12%. And again, it comes back to, what's the point in looking at, what the fundamentals of a stock is, what its earnings are doing, and even what the economy's doing when people question those figures as well.
We've had a housing bubble where obviously houses have been clearing the market on 25 times average earnings in Shanghai, and where the ratio of new build to underlying demand has been way out of kilter. So we've had 22% more houses built than have actually been bought. We have also had a vast credit explosion, and one would have to argue that that was largely a result of global quantitative easing. Then we had an investment bubble. We had an investment bubble in terms of infrastructure and in terms of productive capability, which is one of the reasons why we have global deflation.